Okie dokie. Screen share. Right. So, what's going on today? We've got jolts coming up. That should garner some attention, given the importance the Fed has placed on progress of a still tight labour market. So that is probably the main event that we need to be looking for. That would be 10 o'clock New York. So we've got plenty of time. We've got the Wall Street Open that we're building up to. Ahead of that, let's look at the dollar for the moment. So the dollar broke fresh highs Friday. We've had a subsequent pullback. We've hit stops below the inside day on Monday, and we are retreating to the upside. So we've come up, corrected, respecting this trend line support, and potentially about to move higher. Right now, the line in the sand is down here at 103.40. That was the low in conjunction with that high. So we've lightly come down, hit stops, and we're triggering an upside move on the back of that in the US dollar. You can see that more clearly on the hourly chart. This is today. So just pull back a bit, back that up to the daily again. So the impulse correction, the correction has come into the 50% mean reversion of that move to the upside, right? So it's pulled back a significant amount, significant enough for it to continue on to the upside. Now, whether we're going to see that today or not, we don't know. We're just drawing a thesis. So we've got stops above yesterday's inside day highs as well to target. Stops up high. So as I said, whether this is going to continue, we don't know. We may be pumping up to come down and then potentially move up higher later on in the day. We could be moving up to come down to continue up. Okay, so we have an overall bullish bias on the dollar fundamentally and technically for the day ahead. This may continue up into the stops before pulling back. It may not pull back at all, but you'd expect it to. Yields on the 10-year, we've carved out this sort of M formation. We've come up into the neckline of that M formation. So first leg, neckline, second leg, testing the neckline. So in that we have the bearish impulse, break of structure, so coming down, moving up into the neckline, so impulse, correction, continuation to the downside. So there is a technical bias to the downside. Although we are sort of accumulating around this demand area. Right, those highs there, these wicks, probably pull that down a bit. to meet the wicks in here. I'll change that to green. So we have a demand area that we're finding demand at, right? So we've come in, we're trying to break lower, but we're getting demand in this familiar area, and that's causing a move up in yields on the day. So this is the daily candle with the wick. So it's tried to come down, and we're moving up, and that is supporting the US dollar at the moment. If we come in on the day itself, and I'll just clean up the chart a bit. So we are technically testing a key area at the moment. So this trend line here is essentially still intact up until perhaps here. So we're testing yesterday's closing price. So we, as I said, we came down and we're moving up. That's supporting the dollar. We filled the gap. We're testing yesterday's close. We're now moving up into a in fact, the swing high is here by this indicator, the fractal swing high. But I'm also going to mark slightly below that, this shoulder. So this area really is going to be resistance for the immediate future. And while we're below that, we're still technically on the back foot. We're still bearish on this. A breakthrough here would be bullish, very bullish for the US dollar. So just keep note of that. So long as we stay below that area of resistance, we can easily see this continue to the downside and be a weight on the US dollar. Okay, we'll jump straight to the euro. What is euro? Is it let's look, day 3? Right, I'm going to clean up the chart entirely. It's a little bit messy for me there. Okay, so the euro has broken structure to the downside. So the bias remains to the downside until it can get above resistance. Now it's testing this last month's lows. Okay, so that's acting as resistance at the moment. We've got dollar strength coming through at the moment on that wick. You can see this is the daily chart. So we've had an impulse, we've had a correction, we've had an inside day on Monday. We've come up to hit stops and squeeze out the shorts, and we might be resuming the downtrend. On the Fibonacci, we've already come up to a 61.8, often regarded as a resistance level. So we have that confidence with the 61.8 and last month's lows as a potential firm resistance. Right, so we don't need to leave that figure on there, that just clouds things, but the 61.8. So that red line is a firm resistance line as per the Fibonacci retracements. Last month's lows, today's highs over here pretty much on Friday, lows last Tuesday, some kind of congestion over here as well on Thursday. So it's been a well respected area and it's being respected again on Tuesday. So we've come up to hit stops that were above the inside day. Right, we put the short squeeze on and we're potentially coming lower. Stops below here. To target. So that brings us below yesterday's lows, 107.92. 108 is going to be probably going to be a support area. The minus 272 of that correction I've just measured. So from the top of the correction, so bearish impulse, bullish correction, measuring that correction, downside extension, targeting minus 272 and then minus 61.8 and yesterday's lows. All of that there, potential demand territory, and a break below yesterday's lows opens risk of a continuation through stops into last week's lows, down at 107.65. So we've got day one, day two, day three sell-off. Day one longs, day two, some longs were coming in, closed higher, longs again, squeezing out those longs in today's price action so far. However, well, I mean, there's nothing really jumping out at me as per a setup, but if we were to break the bearish trend, then we could have a squeeze put on today's shorts if this demand area acts as a demand area. Could be building up, coming in, bottoming out, move up. So let's go down to the 15-minute chart. Just check out where we've been today and the various sessions. So this was Asia over here. See, so what we might have is a 3-session setup. So we came up high, squeezed, pulled back, continuing to the downside, and as I said, we might bottom out. Um, I'm looking for the Wall Street Open. So if we come lower, start working the lows. So we've got 1 push, 2 push, 3 push into the lows. We might get something on a micro basis, 3 pushes within the US session into the lows, a break up, break of structure, a pullback, and a continuation to the upside. That's what we might be looking at, or we're just going to plummet. And as I said, the break of yesterday's lows opens risk for a move into last week's lows in the 107.65s. Perhaps we're going to target these stops below yesterday's lows. We could have the pins into the stops and then a move up. That would be quite typical as well. Right, we're going to move on to gold. So gold on a weekly chart reached the 38.2. So if I come out to the weekly chart, so we had the bearish impulse that broke, the break, not much, internal structure. So we've had a move down, a change of character in breaking out this low here internally. So move down and move up into the 38.2. Now, at the 38.2, I like to use that as a gauge to start looking for a continuation to the downside, but that's not to say that this can't come up further. Of course it can, but the 38.2 is a significant retracement and can often attract opposing flow. So we're starting to see that. We're starting to see the bears move in. Now, in that respect, they could be moving in, dropping it, and then to pull it up again. So it's just worth noting that scenario. Um, this is the daily chart. And as I said, bulls are moving in. We've got pins up here at where? At last, what's that? Last week's highs, right? So we've retested those highs and we're failing so far. Let's come down to a 4-hour chart. Yeah, strong rejection from last week's highs here. So as I keep saying, most breakouts fail. So we've had failed breakouts on the upside and a subsequent slam jam to the downside. Now taking on structure, smashing through yesterday's closing price, taking on structure in this candle here at 1917. On a lower time frame, what does that look like? It's been it's technically broken. Let's see if we don't get a pullback and a continuation to the downside. So I could say that we've officially broken this trend line on that move. Let's put it there. Let's still over here. So that's a broken down market now. Bearish bias. Okay. So what we might see is the pullback. So that is the peak formation for the day. Um, Day 2, continuation. We've got bears that came into the market, squeeze up, more money coming on, probably new money for the week, and looking to head lower. And a break of 1912 opens risk all the way down to last month's lows. On the other hand, it's worth noting that all of this down here is trapped volume, and the market might want to stay away from there. So any pullback we see here may result in support. Well, so sell off, pullback, continuation, potentially triggering stops down here. But maybe we'll see support come in for a continuation to the upside, pulling away from all of this trap volume down below. And therefore, we'll see a fuller bullish retracement, as I said, in this weekly chart. So bearish impulse, correction. This correction, it might be premature to be saying that, well, the correction's over and we're now moving down. No, this could be more probable. So impulse, and this is just the beginnings of the correction. That's a very strong initial candle, which implies there's momentum in this to come up. So perhaps we're going to see a shallow move to the downside today. And this could be the dump before the pump on the day. So we've got peak formation high here, a peak formation low here. Perhaps this is going to be a strong peak formation low. I mean, this doesn't look particularly impressive, does it? This is a pretty flat attempt to move away from those highs. So there's bound to be stops that are layered above here, double top highs. So let's see how we get on. Again, if yields do what I suggested they might, then that would also play into the bullish thesis. So if this 10-year yield fails at this resistance and continues to the downside, then that is only going to result in a move up in gold. So I'm going to say that this could just be a dump and pump scenario. So looking for buys. Dump and pump. Dump and then pump up. So let's see what happens. So looking for demand in here for the day ahead. And we've got stops below here for sure. So let's see how we get on with this gold later on. Right, the indexes. So we've broken. So this is day 1, day 2, day 3. So day 3 sell-off perhaps into this length. So we've come up, consolidating, sell off. That's what I'm looking for. Um, just pausing to think. In that respect, we're going to need a stronger dollar and yields, risk off sentiment. We'll have to see. So we've had a impulse to the downside. Let's move here, broke lows. We had a subsequent move up, and the railroad tracks being put in here. So that impulse being matched by a equally strong downside move. So there's bears are in the market, taking control. So waiting patiently to see if there's any developments really. We've got two peaks, peak one, peak two. This is a broken down market. Timing wise, it's not ideal, but there's certainly prospects here of a move lower. Day three, same with the NAS, pretty much exactly the same setup. Broken down market. M formation. It's very bearish. Looks like it wants to just pop to the downside, doesn't it? So you've got this M formation here, topping formations up top. Uh, Engulfing candle, wicks. I mean, if this engulfs, that would be very promising for a short. You've got 14 seconds till the end of that candle, so is it going to drop? Probably not. 5 seconds to go. Right, new 15-minute rotation. Looks like there's plenty of support here at the moment. If that wanted to go, it would have gone in that candle probably. You've got engulfment, pin, engulfment, pin pins. That if that was an engulfment, that would have been a short entry for a short before the Wall Street Open. It looks like support's coming in and perhaps we're setting up for later in the day. Being asked for Euro CAD, so I'll jump to that now. Right, the market is. Let's go to a plain chart and come out to the weekly. It's all very choppy. So we've got support in that harmonic formation down here. Come up, corrected, potential continuation to the upside. That's on the weekly chart. Okay. However, on the daily, you do have this scenario where the market's come down, broken these lows. So if you come down, you correct it up, perhaps it's going to roll over to the downside again. So perhaps it's pretty early in its correction. In terms of the correction on the weekly chart there, we've already made a 61.8, very strong demand in there. So, there are prospects of a move lower, but I think that the intention is to go up overall. So it seems to be pretty sideways, indecisive stuff at the moment. In what regard are you monitoring this? Why is this on your radar? It seems very choppy to me. I mean, this sort of stuff. I mean, you've got no idea what There's no bias really. You're trading on the inside. Anything that you do today, you're just on the inside of this, and it can go either way. It's not something I'd be looking at. Is it trying to move up? Looks like it wants to. Up, correcting, ready to go up, but then the daily chart is conflicting. It's not something that should be on your radar, I don't think, depending on the trading style. I don't know what your strategy is, or I can't make sense of it myself. Well, if anything, I mean, it looks as though it wants to go up. You've got arguably there's sort of a head and shoulders type formation, but again, this daily chart is bearish. So I can't pinpoint anything more than that. Bullish correction, strong bullish impulse, strong. It's moving on. Aussie yen. Right, so Aussie yen. Aussie yen, despite prospects of a sell-off in stocks at the moment, is trying to firm. So maybe it's pumping up before the dump. Mind you, that's the weekly chart. Bear with me. Three pushes up to come down, perhaps, on the daily chart here. 4-hour chart. Front side of the bullish move. Wicks struggling to continue higher. Okay, so we've got bias to the downside in line with stocks. Right, so we've got 1, 2, so this is Tokyo, this is London, Frankfurt, Europe. Failing to move up so far. Strong moves to the downside, pretty flat. Let's move this to the 15-minute chart, we better look at this. So we're sort of consolidating here. Failed breakout perhaps, consolidation, sell-off. So we've got resistance between this minus 272 and the 61.8. So we impulsed up, we corrected lower, impulsed up. So I'm basically just drawing the Fibonacci on this correction. Corrections between a high and a low. So low to up, so bottom to up, and that puts this high right in between the minus 272 and the 61.8. A subsequent sell-off. Now we could be impulse correction. We could see the continuation to the upside, and therefore we can do the same on this correction. So impulse correction. If this is going to move higher, then perhaps it can go to 94.65, 94.73, somewhere like that. Here, impulse correction, impulse. Or this is failing to stay up. We're consolidating, and we're going to squeeze back down into trendline support. Day 1, day 2, day 3 for the sell-off. We'll have to see. I just note that Aussie yen tends to track stocks, risk sentiment. So let's see how this plays out. So if we get a break below the lows, and there's risk all the way lower. All the way into London's lows. We've got yesterday's closing price near there as well. So all this here is a target. This area down here. Okay. Right. Any other assets you want me to look at, guys? Dollar is pumping. Yields are testing this resistance area. 2-year nicely bid. Stocks are sliding. Breaking support. US 30 working the lows. So this is a broadening formation. So it's broadening. The market is broadening. So this could be the dump before the pump, back up into shorts, targeting the broadening formations, resistance up high. Okay. Right. Just checking to see what else is on the radar. Just looking here at Euro Oz. Big pump up. Be setting up for a short later in the day. Same with Sterling Oz. Interesting. Got that M formation, failed to continue up. Broke struck to the downside. We're going to pump up maybe for the continuation down. That's both for Euro Oz and Sterling Oz. I'll just keep those on the watch list for today. Any other pairs, guys? I think we'll wrap this up. Start rolling up our sleeves. Looks like we've got some nice movements today. Early doors. So this dollar has come up into those stops as we talked about earlier. So could this be the pump before the dump? And in that respect, the euro dumping before the pump. It's coming to stops as we talked about. Let's see if we get some stability and then the drive higher. The dollar is on a tear indeed, yeah. These yields are coming back on the 2-year to close the gap. Gap's lower, pumping up, perhaps to come back down. Right then, going to wrap it up and let's just, trade the setups. Let's see what comes out of all of this. Getting this slide in the stocks. This is pre-open. Okay, guys, have a great day ahead, and we'll catch up later on in the day.